Welcome to the Real Deals Real Estate Podcast, where you'll learn about buying and selling homes and how to invest in real estate. Now, here's your host, Donald Torrence of JAVE Real Estate.
Good day, everybody. We back at you again. This is me, Donald Torrence, coming at you. Been investing in real estate for 30 years, so I got a lot to share with you all. Um, Today, we're going to talk about mortgage modifications. Today with me is Cynthia. Cynthia, can you introduce yourself?
Hi, everyone. Glad to see you here. My name is Cynthia. I'm an investor. I don't want to tell how many years because that'll tell my age a little bit. But I bought my first house when I was 19, starting college in Detroit, Michigan. The HUD house, $6,001. My best friend, boyfriend, was a general contractor, and he popped my house, and I was really, really happy and satisfied. And I fell in love with real estate investing. I bought a second one about a year and a half later, and then a third one 6 months after that. And then I went over to professional school, became a physician. So my name is Dr. Ware in internal medicine, retired with an explanation point at the end of that.
Say, don't call me, ask me nothing medical.
Well, I do give a little bit of advice, right? But I'm not writing prescriptions, doing that whole physical exam, and now you got to kiss the computer.
Yeah.
And that changed the game for me in medicine. I found myself not taking care of patients, taking care of a computer, and COVID came in on top of that, and it was just time for me to go.
Okay.
And I do miss it, but I'm trying to create a legacy right now for grandkids I don't even know I have.
Right.
So it's all good. It's all good. Okay,
So,
Donald. So we've been talking a little bit about a couple things.
yeah. And the reason I was talking to you about the mortgage modification is because over the weekend, actually Saturday and was it Friday? Someone was talking to me because they was in a situation, tried to get a mortgage modification, and they just didn't understand what was going on. I'm certified in short sales and foreclosure. So I still got marketing out, and with the foreclosure starting to increase, people don't realize it because they keeping it hush hush because it can actually damage the market if they start releasing as many foreclosures as out. But they asked, why is it taking me so long to get my mortgage modification done, completed? I said, well, it's a lot of variables there. There's no one simple answer for that. So, and a lot of people listen to these radio stations that talk about mortgage modification. Call us, we can actually get you a mortgage modification. The first thing is you need to know where you are financially in order for you to actually qualify for a mortgage modification. So most of the time people apply for a mortgage modification, they don't know what their debt to income ratio is. Debt to income ratio is very important. It's the same as if you're buying a house. If you have a 33% debt to income ratio or anything over that, you're most likely going to get denied. There are some banks that will go 41%. Those banks that go 41%, it's a small few of them that will, but it's a small few. And they scrutinize your file so bad that it's like they want you to give up anyway. So when people talk to me about them doing a mortgage modification, I always ask, what's your debt to income ratio? What's your credit score? How much income do you have? So
No savings. No savings.
those are the three most important things you need to know before you
Okay.
even do any paperwork. And if
So
you
give them to me again.
it's your debt to income ratio,
ratio,
your credit score,
credit score.
and what's your income. So most of the people get behind in their mortgage because they've had one of those three damages. Whether they over exceeded their debt and
Mm.
they can't pay their bills no more. So first thing people stop doing is stop paying their mortgage because that's the highest debt that you're gonna have, that payment you're gonna have every month. So most people stop paying that, then the car note, then the lights, then the gas, and it just filters down. So most of the time when you talk to somebody in foreclosure, it's just not the house. They got other issues. So you have to actually start breaking that down to them. What is your what is your end goal? Are you trying to keep the property or are you willing to let it go so you could try to get some money in your pocket to restart your life?
Okay.
So you have to ask them those questions because that's important. Because if they're trying to keep the property, now you need to dig into their financials. Now you need to dig into they debt to income ratios. Now you need to.
So I got a question.
Mhm,
When if they say they want to stay on the property. This is my house. I've been staying here for 25 years.
mhm.
They actually almost got it paid off if it hasn't been received a second refinance, right? A second
Right.
finance on it.
Mhm.
It's almost close. They got a lot of equity in the house,
Right.
right? So if they say, I want to stay in my house, okay, we're going to talk about credit score because you mentioned credit score, how that plays a factor into it. But if they've been there 25 years, the income then change, maybe the health then change to influence the income to change. They can't work. They can't work
Hmm.
now or
Right.
something. So I think that that awareness, what I found in communicating with people in foreclosure, the awareness, the self-awareness of how I got here, you got to work on that a little bit for them to get to that aha moment to say, I I can't help myself and I
Right.
need some help,
Right.
and
That is
as an
true.
adult, as an
And
adult,
and then if they have that equity, let's just say let's just use $100,000 house and they done paid it down to the way they got $15,000 left to pay off.
mm, ooh,
So you got plenty of equity, but can you take that property and maybe refinance it to actually pay off that 15,000? But the problem comes into again, where's your credit score? Where's your income? And what's your debt to income ratio? All that comes into play where you may not even be able to refinance and use the equity in your house to save it. You may have to sell because you won't get a mortgage modification because you don't have the income. Because how you
mm,
gonna pay the loan back? You don't
mm,
have that coming. So and what you said was very important. Something health, or they were married and they lost that other spouse. Uh,
yeah,
that
mm,
they got downside from their job. Now they making half
mm,
what they was
mm.
originally
All
making.
those things hurt.
So
Yeah.
how can they afford it? They can't.
Mm.
So when you go to a lender and they look at all that, you're not gonna get your mortgage modification. You're
Just
not gonna,
$15,000 off.
yes,
You lose 25 years worth of living in that house for 15, let's just say 20,
yes.
$20,000. You but you and I know that there's places where you can go
Hmm.
to get that 15, $20,000 that's not a shark, right?
Yeah,
There are a few places, but most people don't shop in those places, right?
absolutely.
My judge friend is old school. He just slammed me down with those places,
Yeah,
right? Don't
yeah.
come to me with some problems with those places because
Right,
he don't
right.
believe in those. He don't believe in those places.
Yeah.
But he did help a friend of mine who had private loan about close to $500,000, and this person just was a scammer, and but she had had enough experience in it that she had herself protected with a promissory note. She had herself secured with the deed title deed, and and her name was on the insurance policy, right? But to go through that for the first time, just it's so emotional. It's so and I had just met her, and she was crying for an hour and 20 minutes to me, and I let her vent, and then I said, "Hey, I'm not a lawyer, but I know a lawyer friend. Let me get back with you in 3 days, and let me talk to him." And so he just slammed me down with, "You guys don't have no business doing that kind of business." You know what I'm saying? But I said, "Listen, she's a good lady. She needs some help. So tell me what she got to do to help herself, right?" And he gave me four, 5 things that she need to do right now. Bam, 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 bam. And then when I called her, she did them all. And when I called her, she was in a whole different mindset, right? It was good, and it did stay. She got most of her money back, almost all her money back, and I think she was dealing with one of the properties. Okay, I'm gonna have to get this. This might be an attorney.
Okay,
I'm sorry.
Okay. I think what we was just talking about is important, that it's about their credit, it's about their debt to income ratio, it's about their job. But what the bank is more so concerned with is the person themselves. Are you a person that we can trust? Because now they got to build trust back with you. Are you a person that we can trust to actually keep making these payments if we were to do the mortgage modification? And that's an important part of that whole process. And the way they do that is all the documents that they ask for. So when you call out your bank and you tell them you want a mortgage modification package, you speak into the loss mitigation department. And what people need to understand, in the loss mitigation department, that person might have 100,000 files. They just brought somebody in from another department because they see that department need help. So your file gonna get passed to somebody else. You might have started off talking to John. The next week you talking to Joanne. The next week you're talking to Susan. The next week so your file is constantly moving, and it's never at the same person's desk. So when people ask what's taking so long, because your file just went to somebody else and that person got to get brought up to speed on your file.
Wow, that's
So
awesome.
that part never gets discussed. That part never is told, that your file, because we are so overwhelmed with all the foreclosures, we never get a chance to really dive into your file. So when you do your mortgage modification package, you better dot every I, cross every T, send in every bank statement, send in every check stub, send in all the documentation that they ask you all at one time. And it's important to not just send it via email. You should send an email, fax, certified mail, and you should also ask what's the best way to communicate with you. Is it email, or should I be calling you? But I still would email and call. And you want to jot down the dates and times that you spoke to whomever you spoke to, because all that's going to be important. If your mortgage modification didn't stop the foreclosure, you need to go to court and go back and say, "Hey, look, this is what we was in the process of doing. Here's all the dates that I've called, and here's all who I spoke to." So you can actually still try to get that foreclosure overturned, because you can get a foreclosure overturned. And most people don't know that they can actually do that.
Oh, I never
So
heard of that.
yeah,
Foreclosure overturned.
yeah, it's showing that they didn't have the rights to actually foreclose. Is what it is the
Wow.
whole process. Because most people just because a bank say they foreclose don't mean they have a right to foreclose.
Wow. I've been in that situation.
Yeah.
But the attorney that I have wasn't, he didn't fight.
Mm,
That I shouldn't have been in foreclosure,
mm,
right? They sent me my last three of my payments back to me in the mail.
mm.
So where the hell were they at? Sitting on somebody's desk. That was in 2007 when they were, how do 150 houses foreclose in 1 month? Remember
Yeah.
that was happening? I was
Yeah.
like, they taking these people. Next minute, AmeriQuest
Yeah.
that had
Yeah.
it had a class action suit was
Yeah.
taking people's houses.
Mhm. Absolutely. And that's why because they always had you sign the docs knowing that, letting you know that your mortgage can be sold after closing.
Yes, my it was sold over and over and over again.
So now what happens is that new lender don't get all of your paperwork. So they
Mm,
not your lender in theory because they don't have the proper docs. So one of the things you can do to slow up your foreclosure is to ask for all of the legal docs that you
yeah,
sign. You
I
want
should
wet
sue the
signature
attorney.
docs.
Yeah, he gave my house up.
Yeah, see. And most of the time they can't produce those. Most of the time it's so they have to because you ask for it and you ask for it in writing. You have to ask for it in
Hmm.
writing. You can't just tell somebody over the phone you want it.
Hmm.
You have to
Hmm.
have documentation showing that you've asked for this and they just didn't produce it. So
Hmm.
once you show that you asked for it and they can't produce it because the new lender it gets filtered down so much that that paperwork has just got lost and they don't have
Hmm.
it.
Hmm.
So that's reason to stop the foreclosure. If they still go through with the foreclosure and they still hadn't produced the documentation, you can sue them. You can file a lawsuit against your mortgage company for wrongfully foreclosing on a property that they don't have rights to.
I'll be
So,
damned.
so it's things like that that can happen in that process of doing a mortgage modification, or even just in the foreclosure process. So that's one of the things that hurt a lot of people that's in mortgage modification is because they file get transferred to debts to debts to debts, and you never talking to the same person. So and a reason for that is just they just so overwhelmed, and then the file have to get spread it out to other people, and that's what happens, and that's why it takes so long that
Mm.
process. If you ever get to know anybody in loss mitigation, they'll actually tell you how overworked they are with less. The work comes in so fast with less manpower, and they can't do anything about it. But like I said in the beginning, the mortgage foreclosure process is starting to increase more and more, and it's just not being spoke about in the papers and things like that.
Mm.
So that's an important part. Make sure you send all your documents in at one time. And the squeaky wheel is the one that gets the cheese. So that gets the oil. The squeaky wheel gonna get that oil. So if you call your the loss mitigation today and you don't call them to next month, they not your file is getting pushed to the back burner because you're not somebody in my presence right now. So when you send in your docs, you want to call them and say, "Hey, Steve, did you get my package? I sent it in
Hmm.
such and such. I just want to make sure you got it." 2 days later, I'm calling, "Hey, Steve, I know you said you got that package, but did you get a chance to go through it, look at it, see was everything there?" "Oh, you missing this? Oh, Steve, I'm getting ready to get that to you right now. I'm put it in the mail and I'm gonna email it to you. Is that okay?" And he's gonna probably say yes, send it over, whatever he's gonna tell you. 2 days later, I'm calling you again. "Hey, Steve, I
Okay.
know you told me you didn't have this. I sent it over. I just want to make sure you got it." And you can just keep doing that. So Steve know when he see your number pop up, he know you calling about that mortgage modification, he's gonna work with you to try to get it done. So you want him actually start becoming his friend because you might not get the mortgage modification. You might have to flip it into a short sale. You might have to tell them you found a buyer and you need time to sell the property to your buyer. So you just made that rapport with him. So when your file have to go to the next person, Steve's going to tell that next person, hey, Joanne, when you got her file, I've been working diligently on her file. She's been
Okay.
doing everything. So now you build a relationship with Steve that he's going to actually talk to the next person.
Wow.
And I've called loss mitigation when they transfer files and they say, oh, yes, Steve told me about you. He said you might be calling. So I got your file now. And then you just do that same process all over again with the new person that got that file. Just
Wow.
be that squeaky wheel. So, and that's how you get your file pushed along to actually get to that last stage of that mortgage modification.
Follow up in relationship. I hear you.
Yeah,
Follow up in relationship.
yeah.
Yes.
It's so important in almost everything that you do to actually get what you're trying to accomplish. So now let's say you didn't get your mortgage modification denied. You can't, there's no trying to reply for it. You can't get it again. You can't do anything. Let's say you done did all you can. Now you're forced to actually sell that property. That's where most people turn to realtors, and realtors are not your best option to sell a
No.
property that's facing foreclosure.
No, you're not for a couple of reasons. You're not a priority,
Mm,
particularly if you got a busy
right.
realtor. And then if you got a not so busy realtor,
Right.
they moving like a snail. And so I've been calling a realtor. Well, I was calling a realtor probably every other day
Mm,
because their name is on a lot of properties in my area. I
mm,
haven't had her call me back, not yet.
mm.
I didn't talk to two owners. I didn't talk to two owners saying, hey, I looked your number up because I can't get your realtor to call me back.
Yeah, it's sad, that you go through that with realtors because they thing is, I put it on the MLS, let a buyer's agent come bring me a contract, and then I present it. That's how some agents think, which is really sad because you're not pushing my property. You're
Not
not
pushing
trying
your
to sell
property.
it. You hoping that the MLS sells it, the multi-listing services system sells my property. And that's what hurts most people facing foreclosures. And then they ignore the investor that's coming along to actually buy their property from them to actually get them out of the situation. So investors are a big part, an important part of people facing foreclosure that needs to make something happen right away to keep from going through that foreclosure process. So you said a valuable point was about when somebody's facing foreclosure to make them see reality about the
Mm.
condition. You want to talk about that a little bit and how important that part is?
Yeah. I I find that a lot of individuals that's in foreclosure want to their mindset is almost like out of sight, out of mind. If
Mhm.
I'm not talking about it, it's gonna go away. But
Right,
the
right.
foreclosure is not going to go away. And they stop answering their phone. They peeking out the window before they see who's at the door knocking. They don't answer the door. Um, they just don't want to talk about the situation. But that's how you gonna get it resolved. That's how
Right.
you got somebody knocking at your door to say, "I might be able to help you." You're going to have to talk about it. And so we were I'm in a professional group that was actually um, supporting people, helping people out of their foreclosure. or get through that foreclosure. And this lady was in, she was working in Savannah, but she was living in Atlanta, trying to pull that trying to get past that foreclosure. She got sick. She got sick. And then she lost that job that she had in Atlanta when she got sick. And then her house got behind. And then, so her house was in foreclosure. Before she got all the way well, she started looking for a job. I don't remember what kind of job she had, but she ended up getting a job in Savannah. So she left her house. One of the members in my group had put some information on the door, on the garage door, on the side door, on a car that was in the garage. Somebody called them. Somebody got the paperwork and called them, and it just, they say everything's okay. Everything's okay. I mean, that becomes they go word. I don't need your help. Everything's okay. So you kind of try to still level up to develop a trusting relationship with them, and ask those pertinent questions. How many months is it behind? Is there where are you at in your mortgage? You know, how long have you owned the house? And then you gotta ask about what would make the house beautiful. And I'm saying that opposed to saying what repairs need to be on the house. Right. Because they just as the owner is just in such a place that they just don't want to talk about the situation because it's not a good one. It is a bad situation. And so many times those houses may have a major fixable, it's still fixable, but a major issue with the house that needs repair, like the plumbing leaking, and you can't take a shower or you can't use the bathtub anymore, right? Because something needs to happen with that plumbing, or a leak on in the roof in the bedroom, or up underneath the sink in the kitchen is leaking, and you got a bucket up there, but it's dry rotting the wood, right? It's just things that may let you know that the income changed in the house, the debt ratio may be very, very off, and because of a situation, they end up in a not the best credit. So it's somehow you got to let them know it's okay. Our lives sometimes hit perils. We're here to help. How can we help your situation? To save their credit, to get them in another fresh, doable spot, like the lady that had the house and it was still in foreclosure. She's trying to work it out of foreclosure, but she's living in Savannah. Okay, can you sell that house and actually get you a house in Savannah? And why you got that job in Savannah? It's a new place where she was trying to start over. And I think she said she was coming out of it, but we ended up getting a phone call 2 weeks later. Help, you know, now that help is a little bit more urgent than it was 2 weeks ago when we was talking to her, because she is trying to work herself out of it. But the first time you've ever been in such a situation, you may not know how to get out.
Yeah, and it's important because a couple of things you said there that need to be highlighted is the location of that property, because you have a deeded state and a trust deed state. A trust deed state takes longer to foreclose on. It can be 18 months to 24 months for them to foreclose on a trust deed state. On a deed estate, it can be 3 months to 6 months. So the time frame is a lot shorter. So a lot of times people just keep stalling and wasting time thinking they can fix the problem themselves. And next thing you know, they 2 weeks away from that sale date and then
Yeah.
they're trying to struggle and frantically find some solution.
Yeah.
And the
Yeah.
solution may be coming to an investor and selling the property.
Yeah.
Uh, because you don't have any options after that point when you that close to your sale date. They're not going to stop it unless they know they got an active sale on that property. That will stop it because they got to give you time to actually sell it. If you trying to list it on the MLS, that's not going to stop it. It's not going to sell in 2 weeks if you go to list it on the MLS. Another thing you said is valuable, that's talking about the condition of the property. Why that's pertinent to a foreclosure, because you're trying to get top dollars for, let's say you owe $100,000, but the renovation doesn't support that $100,000 value. So now you can't get that value to pay off that $100,000 that you owe because the house is in disrepair. So it's some key takeaways there that most people need to be aware of when they go to start talking about selling a house because they don't have no other options. And the other thing that you said that was important, when you knock on their door and try to help them, they tell you they got to resolve.
They got to resolve.
Yeah, and when you start digging into it, so what did you do to resolve it? Did they stop the sale date? When you ask, did they stop the sale date, and they say no, you didn't get it resolved. So if
Yeah.
you got it
Sometimes they say
resolved,
what. Sometimes they say what sale date. They don't even
yeah,
know it's scheduled to be sold.
yeah, that is true. That is absolutely
Mhm.
true. So, and when you tell them, no, you scheduled for a sale in 3 weeks. So what did you do to stop the sale? They shocked. They don't know what to say or do. And then that's when you find out that they really don't have the situation resolved. And then you try to give them some answers to what they have. And there's like 13 options they have outside of the mortgage modification. Well, 12 outside of the mortgage modification being one of 13. So there's some options that they have to consider, and you being that expert coming to them to actually show them that there is another way. Let me show,
Mhm.
in case your mortgage, what you've tried, in case it don't work. Let's put this in Hip National Bank so you can actually come back to it if you need to. So those are all important takeaways for somebody that's facing foreclosure and they tried the mortgage modification. It didn't work out for them.
So I got a question. The debt to income ratio,
Mhm.
25%. Would do would the mitigation agent tell them that you probably not going to get it? I mean, do are what's I know it's so many different financial institutions, but what? Because I've seen some people slide right on into foreclosure, and they've been working with the mitigation department of financial institution for like 6 months.
Mm.
You know what? It's
So
and
in that situation, let's say I'm in a state that they could take my property faster. If no sooner you know you getting ready to have hardship, you should be on the phone with your lender. So once you reach that certain point that puts you in foreclosure, you should be telling them, "Hey, look, I'm having problems. This is what I'm trying to do. If this don't work, here's Plan B for me to get a mortgage modification. If Plan B doesn't work, here's Plan C that I'm gonna do a short sale. Please help me so I can help you all, so we won't have to actually foreclose on this property." When you stay in contact with your lender, they don't want to take that property. They're going to work with you to try to get that property sold, the mortgage modification, whatever it is that they know, see that you're trying to accomplish, they will work with you. Most people won't pick up the phone and talk to their
yeah,
lender.
yeah,
So that's
yeah.
the problem. So if your debt to income ratio is too high, they most likely gonna say, "Hey, I don't see how this gonna go through." your credit's off, your debt to income is off, you don't make enough money. They'll tell you in the beginning so you can pivot to something else. But if
Okay.
you don't talk to them, you can't get no help.
You can't help. Yeah. You can't
Yeah,
get no help. If
yeah,
you a closed mouth
yeah,
can't get no food in it.
absolutely.
You can't
That's
eat.
true.
And if you don't eat, you don't live.
Right.
Right? You
Yeah.
got to put the nutrition. Nutrition, look at it, gotta open your mouth to talk.
Right.
And talk and give you acquire knowledge. And with
Absolutely.
knowledge, you make a decision. And then
Yeah.
sometimes the decision may not feel good. The
Hmm.
decision may hurt, but tomorrow it will feel better because you're in a better situation in a shorter period of time,
Right. Right.
right? That's for sure. We live in a house for 20 years, 25 years, almost 30 years.
Right.
Yes, we want to stay in that house. Because
Right.
you probably got a lot of, I'm not going to call it crap. I'm going to call it personal items. You got a lot of personal content in that house.
Right.
But if you can't, your income don't change, your health don't change, you've been living in that house and you see that you're not keeping up with the house,
Mhm.
right? It costs money to live in a house.
Right.
Um, if you live in a house for I lived in my house for 10 years or 12 years. I had the house for 12 years. For 12 years.
Mhm.
Okay. That house needed a roof.
Mhm. Yeah.
I'm living in that house for 12 years. That house needed a roof.
Mhm.
It hadn't leaked, but I needed to have probably uh $16,000 to $20,000 because I had a
Mhm.
steep roof.
We call that
Yeah, so
11 pitch roof.
when those guys was coming back, leaving, talking about 22,000, I was
Mm.
like, wait a minute, where that price coming from? And they start showing me, look at your neighbor's roof, look at yours.
Right, right, right.
I said, okay, but that's just an example of helping you make a decision. What has changed on me in my life? And then you still got to make a decision of how you're going to position yourself to have a better life because you may not be able to remain in the house that was yours. You raised your kids in um, because your situation has changed.
Right. And you got to keep in mind too, pricing of material has changed. So if it's
Yeah,
just think about you saying that was 20 some thousand dollars some years ago. Just imagine the prices today. That roof probably $40,000 easy
how about that?
nowadays. Yeah.
How about that?
All that's important. I hope people got some great information and learn some the process. And don't listen to everybody on the radio saying we can get you a mortgage modification because they can't. There's things that factor in you getting that mortgage modification and you may not be able to get it. The way you can find that out is having a discussion with your lender and seeing where you are credit wise and financial wise to actually be able to have that conversation with your lender and see if they can help
Yeah, yeah. Okay. So
you.
Donald, how just a person that is actually undergoing foreclosure, how can they get in touch with you?
So I'm on all things social media, Donald Torrance. Just shoot me a message and I most likely will respond to you that same hour that I get that message.
Okay,
Um,
okay. That's
So
uh that's big for you to say same
yeah,
hour now.
yeah,
Okay. So I'm on Facebook, Cynthia R. Ware, um, and Instagram, Cynthia R. Ware. And I shouldn't probably say LinkedIn because I don't hardly go on LinkedIn, but I'm going to start going on LinkedIn also. Cynthia R. Ware.
Okay. All
Okay.
right, people. Thank you all for tuning
Oh, wait a
in.
minute. Wait
Oh,
a minute.
okay. What did I
Got to
forget?
say, hit that like button. If the content could help not only just you, but maybe a neighbor, maybe an employee friend. Okay. And hit the subscribe button, because what the subscribe button do is keep us moving and motivated, momentum, so we can bring more information to you.
That is true.
Okay.
And
Yes.
like and share, everyone. Like and share.
Like
You
and
can
share.
also find this on Spotify for those who want to just drive and listen to the content. Check us out on Spotify as well.
All
Thank you.
right. Thank you. Thank you. Thank you, Donald.
Thank you.
If you want to hear more stories and tips about real estate, foreclosure, and private lending insights, hit like and subscribe now.